Hello, welcome to another talk on money, business, and investing. My name is Jose. I'm the founder of the company Brain here, Master Investor. Ensure to subscribe, turn on the notifications so that we know exactly when we go live or upload valuable talk that can literally change our finances forever. As long as we apply the information that we're learning, three things we must do to better our lives in any aspect. Number one, learn something new every day. Master our craft, right? It's all about getting that knowledge from the mentors that already have done what we want to do and succeeded in it. The only shortcut in life is learning from other people's mistakes that already been and succeeded in what we want to do. Okay, if we learn from those mistakes, then we can advance much faster than the one that's still making those mistakes. So we don't have to learn the hard way. We can actually learn from other people's failures. And again, failure is part of success too. We're going to experience down economies when we're investing. We have to protect ourselves by diversifying among the different asset classes that exist. That's what we learn here in our community. We are the global brand of money, business, and investing. Our mission is to elevate the financial well-being of humanity through high-quality financial education made simple. We look at opportunities to build passive income and true wealth. Today, we're going to be covering how to invest in the asset class of crypto. Master to make wise investments in the new asset class and new currency of crypto. So 5 asset classes that exist that anyone can begin to invest for passive income and capital gains income. Rule number 1 in our community here at Master Investor, we focus to build passive income and make money multiplied through sound investing, which requires financial intelligence, which comes from financial education. So our goal is to get financial education daily, commit to that, learn something new. That's the first thing. And the second thing is to apply whatever we learn, if it's a concept, if it's a strategy, if it's a core value that we need to switch within all core value that we have, and that is not longer working for us. A lot of people still practicing the game of money with the old rules of money. That's why we created our new ebook, How to Build Cash Flow with the Internet, Turn Passive Income On. Also, we have the 10 new rules of money and how to invest in crypto to build wealth. Find the link somewhere in the description to have access to our website and our products that we have in the website right now available for all of our members. We have digital courses. We have the ebooks. We can find our ebooks on Amazon or Kindle if you like to read through Kindle. However, when we go to our website, we will have additional assets that comes with each ebook. So each ebook is filled with other assets that emphasizes on the topic of that ebook. And we're going to add more assets as we move forward because everything is evolving and we need to update each course and edit the ebook as we move forward. So whatever asset we add into each digital course, whoever gets in at that time, whatever we add after the entry, we will have access for no additional cost. Again, the digital course will go up in price as we add in more assets. We're going to have exclusive interviews with wealthy entrepreneurs, celebrities, legends, new entrepreneurs and investors to provide value to the topic that we are mastering in that specific digital course. So it's a win-win partnership. Go get it right now. Go get the ebook that is in need in your library right now to have access to the ultra wealthy mindset. Okay. And as long as we get in right now, we're going to make sure that we're going to apply that information that we're learning together as we move forward through each day. And we have to put a strategy in place because when we learn something new, now we have to apply, right? That's the second thing, apply it into our lives. And our ebook, How to Build Cash Flow with the Internet, has over 49 chapters. It has 49 chapters, has 580 pages long, and it has literally a step-by-step guide on how to build passive income and how to launch our idea into the marketplace. Remember, every business is built to solve a problem in the marketplace. So today, we have 3 things that we must do in order to better our lives, right? So number 1, we learn something new. Number 2, we apply that into our lives. We must take massive action with that information, and we have to get the results. That's where experience comes in. We want to get real experience. It's not just about reading the book or listening to the podcast. It's about actually learning and then acting on that new knowledge that we got from somebody else. In order to convert that knowledge into our knowledge, we have to apply it in our lives. And the third thing, one of the most important steps, is to teach somebody else how to do what we're doing, because that way we're going to polish our craft. We're going to even become better. And that's how a true master stays a master, is by constantly learning the basics and teaching everybody else that also wishes to learn about the topic. So those three things, write them down, because that is going to change our lives forever. Make sure if we have any questions, drop it in the comment section. We're going to come back and answer them later on. Let's get through today's talk on how to invest in the asset class of crypto. So 5 asset classes that exist. Number 1, business. Number 2, real estate. Number 3, crypto. Number 4, paper assets. And number 5, commodities. They all require financial education. Somebody that is great at investing in real estate may not be great at investing in crypto, because it requires different financial education. Now, business is business, and it stays the same across board. That's why going back to business and learning how to build a business from the first asset class that I mentioned, which is a business, is building a business or acquiring an existing business operation. Ultimately, every investment has a business underneath, whether it's crypto, whether it's real estate, whether it's commodities. There's always a business that we're investing in. So that's why we're going to be speaking about business all the time, because investing is having a plan with an exit strategy, and investing always goes back to business. Okay, so we cannot have investing without business. That's why we spend majority of our time talking about money, business, and investing, because they all work simultaneously. And we need to master those topics. We need to understand how to manage our money, how to use debt, how to elevate our finances to the next level. Not by working harder, but by working smarter and using assets, right? That produces passive income for us even when we're not working, because a true asset is a business or investment that is producing passive income or positive cash flow for us whenever we're not working. And that asset is composed of a system of systems and is built to solve a problem in the world. Find a niche, right? Find a problem, find a need, and then fill it with a system of systems. And that is a business that is providing that solution to that market. And hopefully we're picking the right market so that we can continue to get new customers. Think of big companies like Coca-Cola, Amazon, Nike, Adidas, Master Investor. We have literally the entire world to get as a customer, because our brands are providing products that everybody needs in reality. Who doesn't need to make more money through sound investing? Everybody does. Everybody wants to live an extraordinary life. But not everybody has the mindset, nor everybody has the tools, the resources, the mentors, the guidance. Becoming wealthy is all about following a formula that has worked, that is proven to work, and it's understanding the basics of business. That's why we always encourage everyone to build a business, to learn about building a business. It's not a waste of time. Even if the business fails, we're still learning a lot through the failures. In fact, we learn more when we fail than when we succeed. When we fail, we need to learn how to see the lesson behind those failures so that we can become wiser. And that's when we say it's not investing or business that is risky. It's the investor behind the investment and business that makes business or investing risky. So who are we as investors? That's the question. Are we getting the financial education that is required for us to succeed? Are we an extraordinary investor? What type of investor are we? There are 5 different levels of investors. There are 5 different categories of investors. We cover them inside of our ebooks. Make sure you have access to those ebooks because they are so critical for anyone who wishes to build true wealth. They're a great investment because no one can take that away from us. And like I mentioned earlier on our talk, any asset that we add in there after our entry of that specific digital course, whatever asset we add in there, we will always be grandfathered in, regardless of how much the price will be in the future. So in 5, 10, 20 years from now, that digital course will be a lot more because it will be filled with a lot of different assets, including exclusive interviews with legends and stars that can literally deliver a message that will empower our community, our partners, creating true leaders, wealthy entrepreneurs, and inside investors. Summary of today's talk: Bitcoin is not a short-term investment. It is a long-term store of value. Control is provided by direct ownership, which also eliminates ETF risk. DCA steadily increases in value, particularly following halving events. Bitcoin's variety and scarcity are valued by wealthy investors. Now, let's define ETFs and DCA so we can continue talking about this. I pulled it up here: exchange traded funds. That's what ETFs stands for. Funds that trade on exchanges, generally tracking a specific index. And then the next term that we're going to talk about is DCA, which stands for dollar cost averaging, which is an investment strategy that involves regularly investing a set amount of money into an asset. At irregular intervals, regardless of its price. DCA aims to mitigate the impact of market volatility and potentially lower the average cost per share. We're going to cover that today. Since Bitcoin has finally surpassed the 100,000 mark, interest in cryptocurrencies has grown. However, we should be aware of one issue. Bitcoin is not being treated like a lottery ticket or a stock that can be bought and sold quickly by wealthy investors. We define investing as having a plan with a winning exit strategy. If a person does not have an investing plan when investing, then that person is not an investor, but rather it is a trader or gambler. We are handling it as though it were digital gold, a long-term asset that requires time, preparation, and a plan that suits us. Let's examine the actions of inside investors and how they could help us too. Consider Bitcoin like gold rather than stocks or the lottery. Long-term planning is necessary for Bitcoin. Bitcoin's value is derived on its scarcity. Much like gold, consider how it can contribute steadily to our financial future rather than aiming for quick wealth. Let's keep in mind that in 2023, the U.S. government accepted, the U.S. Congress accept and recognize crypto as a new currency. So crypto is the new money in town, just like the US dollar is a currency. The US dollar is a currency. And now we can use crypto to pay each other, to pay other businesses. People around the world, businesses and big businesses, not just small businesses, even countries are accepting crypto as a form of payment. So now we have to shift our mindset and accept this new era of digital money and begin to capitalize on all the opportunities that are literally laying in front of us for those who are prepared to experience and get positioned for the biggest wealth shift that we have ever experienced in history due to the information age that we are living in today. I like to call it the entrepreneur age because everyone has to get that entrepreneurial spirit out of us. We need to create a solution. We need to provide some sort of value into the market so that we can strive in the new future ahead of us. We're living in the best times, in my opinion, because of the technology and the artificial intelligence that we possess. We all have access to information like we never seen it before, and we can take advantage of every single benefit that comes with that. We can capitalize on new trends. We can understand what is going on around the world. Therefore, we can get ahead of our competition. And there's so much that comes with this new world of technology. So the encouragement is to get financial education daily, make sure that we are doing also self-development, investing in our leadership, because when we want to grow any organization, we have to grow the leaders in that organization. And we need to constantly devote ourselves to self-development, because the better leaders we are, the better teams we can create, the better companies we will be able to establish. Because people that are professional, people that are smart, like to listen to real leaders. And the leader doesn't have to be the best one out of the group. In fact, we are not. If we are the best one in our team, then our team is in trouble and we need to find a new team. We need to make sure that we're putting ourselves in rooms of people that are smarter than we are. And we have to bring the best out of them. That's why a wealthy entrepreneur is a generalist. It's not a specialist. We don't specialize in a certain, we do specialize in investing in money and business, but we hire a specialist to do the task and to do the small jobs that we need to do in order for our organizations to grow to the next level and continue to provide the service or product that the organization was created for. Remember, every business is created to solve a problem. So the ultimate question is, what type of problems do we want to solve in the world? And we need to figure out how to put our money to work in different asset classes as we grow our businesses, because we have to be ready as that money flows in. It has to go into a new asset class, in a new asset. Okay, so that we protect ourselves from down economies and inflation. Inflation will not stop because today's economy works with debt. Why? Because on August 15, 1971, President Nixon separated the gold standard from the US dollar. From that point forward, money became monopoly money, became fiat money, became paper money, and just an idea backed up by confidence. Therefore, today, money is debt. And the government is over $31 trillion in national debt, and it's not going to slow down, because that is how the government works. And the reason why we separated the gold standard from the US dollar, because we are a country that imports more than exports. So if the dollar is attached to the gold, we would have gave all our gold to China and other enemies across the world. So it wasn't a smart idea to keep the gold standard attached to the dollar. That was the best thing a president could have ever done, because it literally unleashed the biggest wealth shift that we have ever seen. Anyone has the keys to become ultra wealthy fast. We don't have to come from a wealthy family. We don't have to win the lottery. We can build businesses online very quickly and sell worldwide and get that excess of cash flow coming in from the end users, and we can multiply that money through different asset classes, such as crypto, the one we're going to be covering today, and using different strategies to get ahead financially and create true wealth. Remember, wealth is measured in time, not just in money. So how wealthy are we? We need to figure out our wealth number, and there's a formula to that. And we talked about inside of our digital course how to build cash flow with the internet. However, wealth is measured how much money do we have right now that can help us pay all of our bills every single month for the next X, Y, and Z years. And we can thrive the way we like to live without shrinking, without saving. In fact, we can expand because our businesses and the money that we have is growing and it's multiplying. So how many years can we go without working? That's how wealthy we are. It's measuring time. Okay, so a lot of people have money, but they don't have free time. They still have to show up to work, and that money sits in the bank they don't know how to multiply the money. So it's not money that makes a person wealthy. If that was the case, and why so many people have money in the bank, yeah, they still not investing because they lack financial education. So in reality, and to be more accurately speaking, what creates money is financial education. Okay, what makes money through sound investing, it goes back down to financial education. If a person doesn't have financial education, that person is gambling and is going to end up losing that money eventually. And if the person wins because he or she got lucky or whatnot, that person will end up losing the money because the wealthy context is not in them. And it requires really look into ourselves. It requires us to go in deep and figure out our core values in regards to money. What we think about money. What is money? How we view money. What did they teach us about money? You know, we have to rewire all of the things that we've been taught about money and put the new rules of money in us and operate with them at all times. It can be very easily to go back to the old ways because a lot of people are operating with the old methods that no longer work. So the best thing we can do is to get financial education, like I mentioned, continue to do that and apply that information into our lives. So whatever we learn from today, let's apply and let's teach somebody else what we're learning. And that way we create a ripple effect. When we have a treasure, it becomes a treasure because we share it with other people. Otherwise, it's not a treasure. So make sure that when we get something good, let's share it because that's how we become even better. It comes back to us. The more people we help, the wealthier we become. The more generous we are, the more rewarded we get because it's all about generosity. It's all about serving other people. It's not about serving us. It's not about just building this business because we love the product. No, it's for everybody else. It's for the world. It's for the people. It's because this is a product that is going to improve people's lives. So what's the solution that we want to bring to the world? And let's get to work on it. Put a plan together. Write some notes down. We will be surprised how important it is to write our thoughts down along the way as we get downloads, as we get inspirations from the universe, as we spend time alone, we're reading, we're listening to something, and all of a sudden we wake up in the middle of the night, we have an idea, write it down, put it on the phone, on a notepad, and then we start building that idea into a business plan. So we say consider Bitcoin like gold rather than stocks or the lottery. Bitcoin's value is derived on its scarcity, much like gold. Consider how it can contribute steadily to our financial future rather than aiming for a quick wealth. So it takes time to accumulate wealth, and Bitcoin rewards those who make plans and follow through on them. Why investing in Bitcoin tokens rather than ETFs? We have complete control over our investment when we own Bitcoin directly, eliminating the need for middlemen like exchange traded funds, ETFs. Again, ETFs are for those people that don't know what they're doing and they're afraid of investing because they lack financial education. So they decide to work hard at a job and give their money away to somebody to invest it for them. And hopefully they earn something, right? That is not being an active investor. That's being a passive investor. An inside investor is an active investor. Master investor is an active investor, meaning that we're actively involved in the investment. We're making decisions. Our voice counts. We control the liabilities, the assets. We control the companies because we understand the importance of control, leverage. It's not about ownership. It's about control, leverage, and using debt as much as possible. Because debt is tax-free. As long as we're learning how to manage debt and we can put that credit card to work and get that money back and pay the credit card back and the interest, then that money is literally created money from thin air. It's not our money, it's the bank's money. We're using OPM, other people's money, legally, and it's tax-free. So legally, we can create tax-free wealth that is tax-free, okay? By using debt and, of course, using companies incorporated in the right states to minimize liabilities, and also taxes legally. This implies that we won't have to worry about counterparty risk or management costs that reduce our profits when we invest in cryptocurrencies like Bitcoin. We're the sole owner of it. ETFs have their own hazards. Even if they could look like a simple solution, ETFs may become less stable as a result of market manipulation and regulatory changes. Since Bitcoin is a decentralized network, adoption rather than intermediaries determines its value. Another factor to consider is the limited supply of Bitcoin. Owning even a tiny portion of the 21 million coins in existence can have a significant impact on our financial future. Owning the genuine thing is preferable to settling for exposure through an ETF. The influence of dollar cost averaging following each halving. As we can see the graph on our screen here, it shows halving day, November 28, 2012. It says year-end price before halving, $13.50. And then we have year-end price after halving, $750. Approximate increase, 5,456%. On July 9, 2016, 650 year-end price before halving, year-end price after halving, $14,156. Approximate increase, that's a 2,077% increase. May 11, 2020, 8,700 year-end price before halving. Year-end price after halving is 29,000. That is approximate increase of 233%. April 19, 2024, 64,968.87 year-end price before halving. Year-end price after halving, $100,363.60, as around 54% increase. After every halving occurrence, Bitcoin's price has historically risen, which is where dollar cost averaging, DCA, excels. DCA indicates that regardless of whether prices are rising, falling, or moving sideways, we are investing a certain sum on a regular basis. Suppose that since 2020, we have been DCAing $100 BTC into Bitcoin each month. This indicates that over a 4-year period, our average annual investment expenditure will have been $1,200. This implies that we will have invested $4,800 over 4 years by 2024. Invested capital is $4,800 was invested in total. Accumulated Bitcoin about 0.1731 BTC. December 2024 portfolio value about $17,000, $772.64. For this reason, DCAing is more effective than attempting to time in the market, particularly for people who lack the time and expertise to devote to learning how to trade. DCA prevents feelings from influencing our choice. We are not following trends or responding to abrupt price declines. Following a predetermined plan, we are attracting our return on investment while allowing the rest to develop and grow. That's how long-term success is achieved. The reasons why wealthy people are claiming to own Bitcoin. Have we ever wondered why Bitcoin is currently being seized by the wealthiest investors? Let's examine several major businesses that have made Bitcoin investments. 1. MicroStrategy. The business intelligence company has more than 42 billion worth of Bitcoin, or about 423,650 of them. Number 2, BlackRock. In January 2024, BlackRock, the biggest asset manager in the world, introduced the iShares Bitcoin Trust ETFs IBIT, which currently has over 500,000 Bitcoins worth over 48 billion. Grayscale Investments. Number 3, one of the biggest institutional Bitcoin investors, Grayscale Investments, oversees the Grayscale Bitcoin Trust, GBTC, which is home to more than 600,000 Bitcoins. Tesla. Number 4, the electric car maker made an approximately 1.5 billion Bitcoin investment in December 2020 and still owns a sizable amount of that original sum. 5, ARK21 shares Bitcoin ETF, ARKV, is a joint venture between ARK or ARK Invest and 21 shares, provides exposure to changes in the price of Bitcoin. Number 6, VanEck Bitcoin Trust, HODL. This ETF, which is managed by VanEck, VANECK, offers investors an affordable option to invest in Bitcoin. And why do these large corporations and affluent individuals have such a strong desire for Bitcoin? It is an asset whose worth has grown over time to start, as opposed to cash, which gradually loses its purchasing value due to the fact that we separated the gold standard from the US dollar in 1971. President Nixon did it on August 15, which was the best change a president could have ever done because it helps us become wealthy faster. Literally, anyone can tap into the unlimited wealth that is available right now, okay? We literally can tap into a new trend and become wealthy overnight. It happens all the time. We need to pay attention and we need to be prepared. We need to be actively investing. We need to be playing the game of money like the ultra wealthy do. It's about learning the rules of the game and mastering the craft by actively playing the real game. Then there is the issue of shortage. The wealthy are aware that there will only ever be 21 million Bitcoin because we can see where this is going, increased demand and greater prices. They are purchasing now. Diversification is another distinctive feature that Bitcoin offers. It is independent of central bank whims in the stock market. With an asset designed for the digital era, we can balance our portfolio and create tremendous profits. Techniques for handling 100,000 in Bitcoin. Let's be realistic. Prioritize the long term first. While cashing out at 100,000 may seem alluring, consider our plans for the following 5, 10, or 20 years. Retaining a key role may yield significant benefits. Rebalance our portfolio after that. Spend some time making sure our investments continue to support our overarching objectives as Bitcoin's value rises. To maintain diversification, that can entail withdrawing earnings or reinvesting in other areas. It is important to stay informed as well. Understanding trends, laws, and innovations can help us make better decisions in the rapidly evolving cryptocurrency sector. Safeguarding our cryptocurrency. Remember, security is more crucial than ever to safeguard our investment at 100,000 per Bitcoin. To protect our possessions, use technologies like hardware wallets like Trezor or Ledger. Dollar cost averaging on a bi-weekly or bi-monthly basis into Bitcoin via trustworthy exchange is an excellent strategy. Then we can move our winnings to a hardware wallet after they reach 1,000. Keep several wallets. Having more than one wallet is an additional security measure. For example, ensuring that in the event of a hack, each hardware wallet has no more than a specific amount. We can diversify our wallets into the following ways. Our trading wallet is the one we will use most of the time. It most frequently engages with dApps or trades. A long-term wallet is one that contains cryptocurrencies that we have stacked or plan to keep for longer than a year. For people that HODL, hardware wallets can be a fantastic option. Typically, a Bitcoin wallet is a hardware wallet that is stored in cold storage. We can choose how much to keep on each of these if we have more than one. Remember that hardware wallets might cost up to $75 or even more. Concluding remarks: without question, Bitcoin reaching 100,000 is a significant milestone, and it should alert all of us to become inside investors and get financial education that can help us make the wisest investments right now. However, how we react right now counts. This is not the time for speculations or wagering. Now is the moment to put even more effort into a sound plan that suits us. To improve our knowledge and comprehension in this area, we might experiment with different crypto research tools. Plan ahead, have a long-term perspective, and above all, control our risk. The possibilities of Bitcoin are vast, but so are the difficulties. Be organized, maintain our discipline, and stay focused on our objectives. Disclaimer: this information is meant solely for educational purposes and is not financial advice. None of the companies, tokens, teams, or protocols listed in our articles or talks are sponsored or associated with us. It is crucial to carry out in-depth research and only make investments we can afford to lose. See a professional for advice and financial guidance. Right? Get the team together, get the attorney, if we're getting in real estate, get the broker, get the right people in place that speaks the lingo. Not all professionals are made for the wealthy. Remember, we might have an attorney that is not a good business attorney for what we're doing because that business attorney does not have the wealthy mindset. A business attorney that has a wealthy mindset, CPA that has a wealthy mindset, will encourage us to make more money, and is not worrying about paying taxes because we already have a strategy and plan in place that is going to help us minimize taxes all the way to zero. We're going to plan to allocate money in the right places according to the law and the tax code so that we can get those tax gains or advantages. People call them tax breaks. They're not breaks. They're actually advantages that are given to wealthy entrepreneurs and inside investors. And wealthy entrepreneurs are those who have the mindset of the wealthy. Those are the wealthy entrepreneurs. It starts within. We have to shift the way we talk about money, the way we view, the way we approach it, the way we invest it. We need to adopt the new rules of money. Start investing here with us at Master Investor in financial education. Read our ebooks. Our digital courses are available on stores right now. Go to our website. We have the 10 new rules of money. We have how to build cash flow with the internet, turn passive income on. We also have how to invest in crypto to build wealth, understanding Bitcoin and blockchain, the rise of legitimate reserve digital currencies and assets. Remember, it's all about having a plan and understanding where we're going in regards to digital currencies and everything that is happening in the world. We're shifting. Everything is becoming robotic, and we need to accept that change. We need to embrace it. We need to create our lane, and we need to have different sources of income coming in from assets that we control with our companies. We need to be actively investing. We need to understand the different asset classes. And we always encourage everyone in our community to launch that idea, to prepare the business plan, to take the leap of faith. Failure is going to be our friend when it comes to business and investing. It's not about running away from failure. It's about learning from our failures and becoming wiser along the way, right? Because not only we are learning from our mentors, which is going to help us avoid a lot of silly mistakes, if you will, for a lack of a better word, is going to put us in a better lane where we're going to have a straight shot, and it should be, going up the echelons every time. We should be able to see that progress as long as we have the right roadmap when it comes to investing. Remember, investing is having a plan with an exit strategy. Even before we touch the investment, we have to know everything about the investment. We need to know exactly when we're going to get our money back. What is the product? Do we believe in the product? How many people have purchased the product? We need to know everything about the investment. We want to see it on paper. We want to make sure that we will recoup our money back. It's a calculated risk. So it's not investing or business that is risky. It's the investor that makes investing in business risky. And let's talk more about money, because that's how we become wealthier. That's how anyone becomes wealthy, is by speaking about money more often with the people that are around us. And we are taught not to talk about money. In fact, that's the very opposite of what we're asking everyone to do here, is to talk about money with family members, with those around us, because it's the only way to become wealthy. We have to have wealthy friends. We need to surround ourselves with wealthy people. And we start with books. We start with connecting through online. Now we don't even have to be there physically. We can access all the information via online. That's why the world is more competitive, because whatever I'm doing here is also being done somewhere else, because we're exchanging that information in real time, and everyone can act on that information accordingly. So it's very powerful. The velocity of making a transaction has increased tremendously due to technology and artificial intelligence. So now we can have billions of people looking at one simple ad, and they can all click at the same time and purchase that product at the same time. We cannot do that in the physical world because they have to wait in line. So the speed in which we can become wealthy and sell things to the world has increased tremendously in the past 20 years. So now we have a new world of opportunities ahead of us. And the ones that are the ones that catches those early trends, those trends that are coming right now towards us, the ones that are looking towards the future instead of the past, the ones that are actively making decisions in regards to their money and how to multiply their money, those are the ones that are going to experience that wealth shift that we're talking about. And we want to be positioned in that category. We want to have access to that wealth shift. That's why we encourage everyone to begin to invest in different asset classes. What is the solution that we want to bring to the world? Let's put a team together. Let's create a prototype. Let's launch that idea. Let's get it going, okay? Because the 3 E's of a master investor, as we learn inside our community, number 1 is financial education. That's the first E. The second E is financial experience, meaning that we're actively investing. That's how we become a master investor or an inside investor. We put in a deal together. We're raising capital. We're approaching banks. We're approaching private investors. Family and members are giving their money to us because they know that we know what we're doing and that the business is succeeding. We're creating a brand. It's not just a business, because we have intrinsic value. We protected the assets with the legalities. We trademark the logo. We register the business. We have intellectual property, copyright our content, right? Everything is protected. No one can take away what we're doing. That's when we add intrinsic value into a company and it becomes a brand. And also we have that business integrity and solving a problem, therefore is making a profit. The business has to be built to raise capital from the front end, from the end users, right? And also from the back end, it has to be raising capital from banks because the banks are interested in investing in good deals that multiply money, because the banks are in the business of lending money, not saving money. Savers are losers in the new economy, and good debtors are the winners we need to get into good debt as much as possible. And then, yes, we're going to have bad debt because we like luxury. We like to buy things, and we like hobbies, and we like to maybe take a vacation at a luxury resort. And we're going to do all of that. But first, we're going to focus on getting good debt, which goes hand to hand with an asset. And once we get that cash flow coming in from those assets and the good debt is paying us positive cash flow, then we use that to pay any bad debt that we want to acquire. So at the end, once we establish our businesses correctly and we protect them and we build in true brands and we have excess of cash flow, we're going to utilize that capital to invest in different asset classes and to continue to grow our wealth number. More cash flow coming to us, more infinite return on investment, meaning that whatever investment that we choose to do, we're going to recoup the initial capital invested back as soon as possible. That way we reach infinite return on investment, which is money for nothing, money from thin air. So when we position ourselves properly with the wealthy mindset, with the right tools, with the right team, and we have the 8 integrities of a wealthy business, right? We make sure that those 8 integrities, the mission, the team, leadership, cash flow, communication, systems, legal, and product, all those 8 integrities are in place, then we can create tremendous wealth and we can have everything for free because now we know how to create an asset that produces this amount of cash flow when we're sleeping. We don't even have to work to make that money. It's coming in to us on autopilot. So we can repeat and duplicate that. So we can acquire anything for free because if you want to have something of luxury, we know how to create an asset that produces that capital to pay for that. And we're going to recoup our capital back if we invest any of ours into the deal. A lot of times we're going to be using other people's money. We're going to finance all of our investments because we like to use debt. So if we have $1 million in cash or $1 million in debt, and they ask, okay, which one you'd rather invest? Let's invest the $1 million in debt first because that is tax-free. And let's use that other $1 million in cash to raise another $1 million in debt because all debt is tax-free. So we want to become creative when it comes to investing. Don't just focus on using your own capital, our own capital to invest. We got to use other people's capital to invest as well. Other people's money, the bank's money, right? Where is the bank getting that money from? The savers. And when the savers continue to save, the more money that they have in their accounts, then the banks can lend us more money to wealthy entrepreneurs and inside investors. People that know how to bring deals together that are sound. They multiply money. They grow in value. They produce positive cash flow. So the bank finds that very valuable because the more assets that they acquire, the more money they can print and lend to other people, and they make money through interest. So it's a win-win partnership that we're doing with the bank because as long as they're winning and they're getting paid for the loans that they're giving us, then we're also winning because we're making money with their loans. Their loans is making us wealthy. That's good debt. It doesn't matter about the interest rate as long as the numbers are working and the debt is working hard and an investment that is making positive cash flow and is covering all the expenses, including the debt service expenses. And it's leaving us with positive cash flow at the end of the day. So here at Master Investor, we welcome everyone to become a wealthy entrepreneur and inside investor by actively investing, getting involved into the game. Today, we cover how to invest in the asset class of crypto. Let us know in the comment section below if there are any questions. We're going to come back and answer them and get to our website, buy our digital courses and ebooks. We're going to be releasing our 4th ebook very soon, How to Raise Capital to Build Wealth. Everything that we need is here in our community to build wealth. Everything that we ever need to build true wealth, we can find it here at Master Investor in our community full of high quality financial education made simple with lucrative opportunities to build passive income and true wealth. Remember, rule number 1 in our community is that we work to build passive income and multiply capital. And sound investing, it requires financial education. I'll see you inside of our inner circle. Thank you for having me, and I appreciate your business. And stay extraordinary and wealthy, bring you the good and bad news of money, the business principles that work in all economies. Make sure that we share, comment, and like, and we will talk tomorrow. Thank you again